morning, everyone. How are you guys this fine Wednesday morning? Hump day, halfway through the week. Oh, I don't know about you guys. This daylight savings time is killing me. Just a moment as I get to my monitor. We just had the opening bell, and it looks like the market took a little bit of a dip. Come on. Can anyone see my monitor yet? I'm not seeing that my monitor is being displayed. Okay, good. Thanks, Micah. What you're looking at here is the diversified trading system. It's diversified because we're looking at the market from 3 different points of view. Here in the top left, we have the Hawk Scalper. Top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right, we have the Raptor. The charts on this screen are the NASDAQ. I'm also watching soybeans on my other monitor as well as crude oil. But since this is our demo room, I can certainly take a look at any market which is of interest to you. Things are looking a little, well, let's take a look at the overnight before I get too crazy. So here's the Falcon Swing Trader. You can see yesterday's session. Well, at least the morning part of the session was very active. It was nice for a change. We had some good selling opportunities. And then it looks like around 7:30 the market did its traditional reversal. This is Pacific time, of course, so that would be 10:30. But by the end of the day, it settled near the lows. And then in the overnight, didn't do too much. A little bit of a rally in the Asian session. A little bit of a poke up and a move lower during the European session, and now here we are. So it's starting pretty much where it left off last night. We did have a first micro-macro cross signal right here, right out of the opening bell. And I probably would have taken that one too. I was still setting up my charts, so I wasn't quite ready for it, but I want to show you a couple of things. First, how the trend line is being respected here, right? There's obvious buying support going on the trend line, which is good. We came back here with a red bar buy signal, which we know tends to develop toward the end of a trend. This is one of our hawk signals that we can actually trade counter trend or with trend, but more importantly, we did see a test to the extreme, right? We did see the market trade higher and fail, and then it came right back with a first micro-macro cross. So that gave this first micro-macro cross a lot of credibility. Notice it developed, well, in this case, exactly the same place as the failure of the red bar buy. So good opportunity for a little scalp out of the open. Oops. And while I was explaining that, we had a macro pullback signal too. Doggone it. Okay. better start paying attention because I'm thinking that we might see a move early here, and that's exactly what we're getting. All right, well, I might have to wait for them for a little bit. Here on the Raptor, we had a very similar setup. Sorry, I'm just trying to roll this over so that the chart expands for you a little bit. Oh, I know what I can do. Hold on. Oh no, I can only make it smaller. That's one thing about Ninja. They only give you the ability to compress the chart, not expand it. I don't know why they do that. But at any rate, so here's the Raptor. It's actually showing us the exact same thing that we were just looking at on the Hawk. Note the test of the extreme and the failure. And we essentially had a double pullback signal. This is a relatively strong signal with the Raptor. Whenever we encounter the hard edge, we look for this double pullback into the hard edge. Now this really broke the hard edge, but we know there's going to be some sort of reaction there. So it comes out of there. Prints are with trend signal, so everything is in sync again, and a nice progression lower. But where we are right now, I'm afraid we might have to wait a minute. Oh, and here on the Eagle. Very nice signal here on the Eagle. Same thing. You know, the structure remains the same, but here we have a green bar sell. In fact, the Eagle fired 2 green bar sells in a row. Same thing, we got this little test of the extreme. This would have been a very good signal to take. Well, I'm kicking myself now that I wasn't ready for that one. So now I just have to wait a little bit for some profit taking to go on to try to rally this market somewhat. Crude oil giving us a little bit of an opportunity here. Not quite as nice a look as what we were seeing in the NQ. The problem here is that we're getting a signal to sell, but we haven't had our test of the extreme yet, have we? So for that reason, I'm going to try to protect myself. Ideally, what I would like to do is I would like to sell below these lows and cover above the high. Oh, I can do that. I'm trying to cover the trade a little bit further back here. That's going to give me a little bit more staying power because I might see this test of the extreme, right? I might see the market try to rally from here. And if it does, well, it could seriously threaten my stops. In fact, it could try to recover the highs. We have taken out this swing low here, or pardon me, swing high here. So we know there's going to be 2 moves to the upside. In fact, I don't address this very often, but all our signals can be traded counter trend, right? You could actually set up to buy a first micro macro cross signal. But this is why I don't normally buy the first micro macro cross, because it's a high probability sell signal. Yeah, there we go. We just hit our high probability profit target on the first micro macro cross signal, perhaps the strongest signal that you can get on the Hawk scalper. And you know, this is something that you should do on your own as well. You should go through and you should find your first micro macro cross signals, because it's going to give you a lot of confidence when you see the signal print to actually take this trade. And not only that, it will help you identify the signal. You'll learn what it is you need to look for. It's pretty easy to identify, really. And you can see here is actually a failure of the first micro macro cross. So the first micro line crosses the macro line. The signal all comes into sync, right? It's not just simply a trend line cross that we're trading here. There's other trade parameters that have to come into sync. So we're waiting for the signal to print. We get our warning dot, our triangle, our hash mark. It brings us in, but then it turns and it eventually fails. But this signal is of such high probability that had you taken this first micro macro cross signal, let's say you chose to cover it above the macro line there, and it's such a high probability signal, it's struggling, it fails. Now you should actually be thinking to yourself, well, wait a minute, that was a high probability signal. It just failed. The market may actually be setting up for a rally. That's how strong this signal is. If this first micro macro cross signal fails, then either the market is going to do one of two things. It's going to rally, or it's going to end up trading sideways. Now in this particular instance, a few bars later, we got a first micro macro cross to the upside. Actually, the signal technically was right there. And had this one failed also, then you can forget about trading. You would have been stuck in a sideways range. It would have looked something like that, and you should avoid all trading until you get outside of that range. But it is a first micro macro cross. I would have tried it, and you can see that that one had very good follow through to it. So that's how strong these signals are, that if you actually get a failure of a first micro macro cross signal, you should be thinking reversal. So here's another one. I'm not going to go through all of them here, but like I said, it's a good exercise to familiarize yourself with the signal and just to gain some confidence with the strength of the signal, how the reliability of it. Okay, so there's just a few opportunities that we saw over the last couple of days. You can see quite a few, and those are just the first micro macro cross signals. That's why I say you can make a living just on trading those. You don't need to know any other hawk signal. You can just trade those. Now let's see if the delayed entry would have, yeah, I would have got my profit target on the delayed entry also. Okay, very interesting. All right, well, we'll put that back on the shelf. Here comes the NQ. They're in retracement mode now, as we anticipated. So we had the early sell-off, which is good. You can see we came right down here to primary support. This is on our ultimate support and resistance suite. This is an add-on tool, by the way. Oh, let me get you some of this information because I know some of you are new to our trading room. So if you have any questions about some of these things that you see here, pricing and so on, you can follow this link. And that will get you all kinds of information. Or you can also email me. I'll give you my email. There you go. Okay, working on a possible trend change signal here. This is interesting. So you'll notice our trend line has changed direction. It's changed from red to green. We're working on our up, down, up pattern. So the buyers have forced the trend line and filter to change color. Here come the sellers. They're trying to recover the market. And now we'll see whether the buyers come back and actually print a buy signal. That would be our trend change signal. Okay, we're into the hard edge. You see here on the eagle and the raptor on our band. And as I mentioned before, we anticipate some sort of reaction when we hit that hard edge. So the NQ a little bit at odds right now. Oh, and while we're waiting for that, oh, hold on a second here. We get our buy signal. Now, the NQ has been making a strong move to the downside. So what I'm going to do is I'm going to dial down my risk amount a little bit here. I'm only going to risk 1% of my trading capital and try to see how this trade works out here. In fact, I'm going to dial my stops back a little bit. Okay, and while we're waiting for that Falcon opportunity, Julie asks a great question. Hi, Eric, says Julie, what do you think is a good strategy? What do you think a good strategy would be to get 8 ticks per day? I think that's a fantastic strategy, Julie. I think everybody should have a profit objective. And I also think that that's one of the best kept secrets in trading. In fact, okay, so they're running away from my order here, so I'm going to cancel that until they come back with my buy order. Some of you will have heard me mention this before, but you can make as much money as you want by trading for $50 per contract per day. That's it, 50 bucks. That's all you need to be able to nail is a $50 trade. So in a market like the NQ, that's 10 ticks. Actually, well, we'll worry about commissions and fees later. In a market like the E-mini, that would be 4 ticks, right? Because the E-mini is $12.50 a tick. Okay, the NQ coming back here with a possible signal on the eagle now. We are printing a signal. It's a hard edge bounce. Normally with the hard edge bounce and with the ATR line against me, I do like to see a green bar sell. It's a little bit stronger. You see, here's the green bar with a sell signal. So I'm just going to keep an eye on this one. We might have an opportunity for a second push entry or even enter below the ATR, make it flip over. Oh, and I can dial, it looks like I can dial that one down also, make it a little bit more palatable. When the market is not behaving the way that I think it should, I do have a tendency to dial my risk down somewhat. Okay, so they're removing all temptation, so I'm going to clear that. And we might get that green bar sell yet after all. Oh, and here we come back with our late filter entry actually. Hold on. There we go. Late filter entry occurs when your filter goes out of sync but your trend line does not. This is actually a pretty high probability signal. Okay, back to Julie's question. Yeah, Joe says, say what? You can make a living trading for $50 a day. This is probably the best kept secret in trading, folks. Most people think that in order to make a lot of money trading, you have to take a lot of signals, right? You got to get in and out, bag 10 trades and fill up your bank account, right? That's what most people think you have to do. It makes sense, right? If you were working on a factory floor, the more widgets you pound out, the more money you make. But that's in the non-trading world. That's in the brick and mortar world. In the world of trading, we're dealing with probabilities and setting ourselves up in such a way so as to take advantage of the probabilities. We're seeing a little bit of a reaction here to the highs. So I'm just holding my stop here below the low. So oh, look at that. Sellers are jumping all over them. Come on, buyers, get up here. Oh, I wasn't expecting that. Should have seen a little bit more follow through on this move higher, on this breakout higher. So let's see if the buyers can recover. Okay, no more interruptions. I'm going to try to finish my point here because it is an important concept to get a handle on. Oh, and you see we're getting this red bar sell. I said I wasn't going to be interrupted. Green bar sell on the eagle. I'm going to set that up. Okay, now honestly, no more interruptions. Okay, so your objective is to make $50 per day per contract. If you can do that, and let's say you do that for a month, 20 trading days, you can make as much money as you want to make. You're going to have, in a market like the NQ where it's $5 a tick, you're going to need to get 10 ticks. In a market like the E-mini at $12.50 a tick, you're going to need to get 4 ticks. The euro also $12.50 a tick. Crude oil 10 ticks or 5 ticks. Crude oil is, of course, $10 per contract. So how can this be? Well, the reason it works is because what professional traders do is they tend to go in with size. They tend to find an opportunity that is a high probability opportunity, like the first micro macro crosses that we were looking at here on our Hawk scalper, or whatever your signal may be. And then they'll go in with size. So if you traded 2 trades a day and you made $50 per trade, so just twice a day, and you traded 25 contracts, you would make $500,000 per year. Now think about that just for a moment. You're trading 2 trades a day for $50 each. So in Julie's question of 8 ticks, I'm assuming she's talking about the E-mini because that would be 2 $50 trades. If she traded 25 contracts, she would make $500,000 per year. Now, I don't know Julie, but she's probably saying right now, well, that's great, Eric, but I can't afford 25 contracts. Okay, what if you did 5 contracts? That would still be $100,000 per year on just two $50 trades. So you don't need to chase the market all over the place. You don't need to be, looking at dozens of different signals saying, oh, well, here's a buy signal, here's a sell signal, here's a buy signal, here's a sell signal. What if you traded 3 contracts? You're saying, well, I can't afford 5. Okay, what if you could afford 3? That's 3 contracts twice a day for $50 each time. That's $60,000 per year. 2 contracts would be $40,000 per year. I know a lot of people working a lot harder to earn $40,000, $50,000, $60,000 than trading 2 contracts or 3 contracts twice a day for $50. What if you traded just 1 contract twice a day for $50? That's still $20,000 a year. How would an extra 20 grand a year impact your lifestyle? Probably buy yourself a really nice vacation for the family and pay off a few credit cards and maybe a couple other niceties around the house for 2 $50 trades per day, trading a single contract. So that's where the true secret is. The secret is not in finding more and more signals. I know that's what everybody wants. That's what everybody keeps asking me for. I had one fellow come to me. He wanted me to show him, he wanted to be a scalper. He says, Eric, I want you to show me how to scalp trade, and I want you to show me how to take 100 trades per day. Because in his mind, if he was a scalper, he had to take 100 trades a day. And I said to him, you're never going to make any money trading 100 times a day. I can show you 100 signals a day. It's really quite simple. You just dial down to a 30-second chart. You'll have 200 signals a day, and you'll probably have a heart attack before the end of the year. See, now here Chris is asking the big question, what if you lost those 2 trades? Yes. That is the big question, isn't it, Chris? That's the question that haunts everybody, because you can see I just took 2 trades here, and the market's not cooperating. It should have cooperated off of this green bar sell, but it didn't. And maybe my stop, maybe it's going to turn out my stop was just a little bit too tight, because I had my stop right here. I just got tagged on the high. So I'm just going to interject here quickly. This is why you need to keep a trading journal. I'm going to make a note in my trading journal right now. Maybe I set my stop too tight on that. We're going to see here in a moment. Okay, so Chris is asking the magical question, what if you've lost on both trades? Okay, I'm a firm believer that you should have a trading quota. And normally the trading quota should be smaller rather than higher. So I don't think you should have a trading quota of 100 trades per day. Oh, by the way, this is probably why things are so nasty this morning. Look, our trade forecaster here is telling us that we're currently in swing mode, and in a couple minutes we're going to be moving into scalp mode. Oh, goody. So the market's not being very cooperative at the moment. And this, by the way, too, is an add-on tool that you can use in any system. Okay, you guys are all asking great questions here, and I'm going to get to them. Most of them have to do with, some of you are finding holes in my example, and they have to do with, okay, well, what if we take the losses? Okay, folks, believe me when I say that this is doable. I know people, well, I'm a person. You do this, it does work. The key is you have to know your high probability signal. All right, you have to know which signal you can take to make the 50 bucks on. Now, you know, the DTS tools are very powerful tools. They're not 100%. You will never find the signal that is 100% correct. You see, I took a losing. Here's something for those of you who are new to the room. Here's something you will never see in another trading room, a trading room moderator who actually admits to taking a losing trade. This was a late filter entry signal. It should have worked. Here, just for kicks, I didn't take it on the hash mark. Let's see if it would have found the target on the hash mark. Nope, not yet. Oh, and I see what happened to me here. I didn't want my stops to roll. Okay, whatever. Trade Manager, what happened is Trade Manager rolled my stops for me. Normally what I like to do, and for those of you who attend the daily room, you know that I like to hold my stop until I see the market, until I see the sellers come back or the buyers come back. And in this case, I would have started rolling my stops here. I think I still would have got stopped out though. Yeah, I probably would have got stopped out for a little bit less, but regardless, I still would have been stopped. But this is a high probability signal. This should have worked. Let's see if I could get my 10 ticks out of this signal. So there's the signal. Oh, it just kissed the target. Okay, it eventually reached it. We're not going to argue semantics here, but it just kissed the $50 target and then reversed. So two things you need to do. First, you need to concentrate on a high probability signal. Next, you need to go for a high probability target. What is a high probability target? Well, you know, the funny thing is I just got this email the other day, and I'm sure you guys see these emails also. Floor Trader developed system that is 92.7% accurate. It makes me laugh because it seems like these systems, when these spam emails first started coming out, these systems were, you know, 75% accurate, and I guess that didn't garner enough interest, so then they went to 83.3% accurate, and then they went to, you know, 87.5, and now they're already in the 90%. I will tell you right now, and some of you will have heard this one also, but I will tell you right now, a system, and this is honest to goodness truth, a system that will perform 98.5% of the time on the E-mini S&P. That's right, 98.5% of the time you will have a winning trade on the E-mini S&P. Do you want to know how to do it? You trade for one tick. I don't care what your entry signal is, 98.5% of the time, the E-mini S&P will give you a one-tick profit. But of course, that doesn't do you any good because at $12.50 a tick between the broker and the exchange, you're not going to see any of that money, right? They're going to eat it all up. You're going to see a couple of bucks maybe. So the point is that if you want a high probability target, Or if you want a high probability trade, have a closer profit target, right? You can set your stop loss here. You can set like a 3-tick target, or here was my little 10-tick, or sorry, this is a 2-tick target. Hold on, I'm messing myself up here. All right, so a little 5-tick target here on the NASDAQ. You can see the market has no trouble reaching that. But even in the NQ, 5 ticks isn't enough to really make a living on. That's why I suggest the $50 target. And you'll need to adjust your ticks for the market you're trading. So you can see here that my trade, my signal was actually reliable, but unfortunately for me, the market reached back a little bit too far and didn't hit my profit objective until stopping me out first. Okay, so we would have just reached the profit target here. Okay, so everybody's asking, well, what if you take the 2 losing trades? So number 1, you need a high probability signal that you can rely on. In the case of our Falcon, it's something like the trend change signal, which occurred right here, right? High probability signal. I'm almost always guaranteed I'm going to at least hit my high probability target. Here was the late filter entry signal and also a trend change signal. Also a high probability signal, just a little bit of bad luck that the market traded a little bit too low, or perhaps I should have kept my stop. You know, on days like today, maybe I should have kept my stop here below my primary support. Certainly would have held me in long enough to reach my profit objective. That's part 2 of the trading equation, is give yourself a decent stop. You know, DTS is very good at picking up immediate momentum. You can see here we had another trend change signal. See, our trend line changes color. Here's our up, down, up pattern. And you can see this one had immediate momentum to it. So even if you had framed your trade to enter here and place your stop right below the low of that bar, you would have been okay in this particular instance. But don't strangle your trade like this. It's more important that you control the risk on your trade. So even though I took a hit for $150, it was only 1% of my account. Okay, if you're trading, you know, it's going to be different for everybody. If you're trading a bigger account, I worked with a guy who was trading a $300,000 account. Well, we were only risking 1/4% trading his account, because he didn't even have to risk 1%. And I work with people who are trading $10,000 accounts, and it's okay, well, we're going to have to risk 3 or 4% in order to be able to put on a trade, because we don't want to strangle the trade, right? We don't want to make the trade so tight that we can't even have a chance to ride out a minor swing. So high probability signal, high probability profit target, structure your trade so you have a chance, never risk more than you can afford to lose. Okay, so those are the 4 things that you need to do in order to give yourself a chance at a winning trade. And what if you still end up losing on those 2 trades? Let's say you do everything right, you do everything to try to keep yourself on the right side of the market. You don't lose too much, but you still take 2 losers. What do you do? All right, well, I think you should have a trading quota. My personal quota is 2 trades a day, but I think anything around the 3 or 4 trades a day is a good objective to have. Now, you need to temper that with some reason. You know, earlier this month, the market wasn't doing anything. It was going sideways. Every single day it was going sideways, sideways, sideways. Even on a day like that, it's hard to get 2 trades a day. So if you have a quota of 4 trades, don't force the 4 trades. If it looks like the market's not doing anything, don't bother. Don't bother taking it. And likewise, there's going to be days where it's like shooting fish in a barrel, where you can't put the trades on fast enough. The market, it was almost like that yesterday. You know, you get one trade after the other, and you're just raking the money in with both hands. I've had days like that where I'll take 10 or 12 trades, which for a guy who normally takes 2 trades a day, that's very unusual for me to take a dozen trades in a session. But the market is just unfolding so fast, the signals are all high quality signals, and you just can't help but make money. Just put yourself in the way of it. Okay, so we've got our 2 losing trades. What do we do now? Well, I have a quota of 2 trades a day, which I've met, but I also have the caveat in there that I want to have a positive result. So that means I need to put on another trade. I need to get myself into a positive position. So I'll take another trade. Let's say I'll take trade number 3. Oh, well, while I was yakking here, I missed my first micro macro cross to the upside. But let's say here we're gonna pretend. Okay, so first micro macro cross signal, right? Micro line crosses the macro line. Everything is in sync. High probability signal. This is a signal I would like to take advantage of. Let's say I'm going to cover it below this little swing low, which I would normally do. Oh, I've got an all runner in here, but for the sake of simplicity, let's say we're going to take all our profit on target. Okay, so there's $200. Let's see if we hit our profit objective. Oh, not quite yet. Okay, there. We bank $200. So what am I down? I'm down $320 because I lost $170 and $150. So now I'm regained $200. So now I'm down $120, right? Okay. So I've reached my 2 contract quota, but I still don't have a positive result. So I need to take another trade. So I'm going to be on the lookout for another high probability signal. So we're going to, because we don't have the luxury of sitting here all day, we're going to, well, here we're going to pretend again. We're going to take our trend change signal here, which I know is a high probability signal. How do I know? Well, I've got the trend change, but look, I've also got the test of the extreme. Market's trading at the top end here. See this test of the extreme right here? That's my clue that the market, that the buyers are stronger than the sellers. All right. So I've got my targets in. Well, actually, normally here, let's see, do I reach my 20 tick target? So I cover below there. Okay, we kissed the profit target. We're going to pretend for a moment that we got out on the target just so that I can make my point. We're floundering a little bit here still. The market should try to give me one more move higher. How do I know? Well, I need the test of the extreme before it can fail, right? I need to see at least a little hiccup here. But let's say that we actually got out here and I got my $200 profit. Now I had a $120 loss. I have a $200 profit, so I'm $80 to the good. I've reached my 2 trade quota, and I have a positive result of $80. So that means I'm going to stop trading today. Now I know that doesn't seem like a lot, or I'm going to go into sim mode for the rest of the day. Now I know that doesn't seem like a lot, but the point is that if you do that, even though you may have taken the 2 losing trades, if you take 2 other high probability signals, chances are you're going to recover your loss. chances are you're going to be able to finish the day at least in the black. Okay, 80 bucks isn't a lot. Most of that, some of that's going to go to the broker. About half of it's going to go to broker and fees. But maybe I'll still put $50 in the bank. All right, 50 bucks, not enough to live on today, but at least I'm not ruining my account. Which brings me to the last point, which is what if you still can't get a winning trade, right? What if the market is just one of those days where no matter what you do, the market turns around and spanks you? Okay, let's say you've taken 4 trades and now you're down 500 bucks or 600 bucks or whatever the number is. It doesn't matter. Everybody should have a pain threshold where you say, enough. The market's just not responding today. And there will be days like this. This isn't like a 9-to-5 job, folks. This isn't something that you can show up, do the work, and be guaranteed you're going to get paid. If you want that, you're going to have to go get a job. That is the only way you will get paid for performance. In trading, you only get paid for being right. You don't get paid for anything else. One of my favorite trading quotes is, the money is made in the sitting and the waiting, not in the trading. Right? This is what a lot of people never get, is that you don't get paid to trade. You get paid for being right. There's a big difference there. Oh, see, and here on my, I was I was right in both trades, but my stops were wrong in both trades. So here's a note that I'm going to be making in my trading journal, because remember, we sold down here, I covered up here, and the market turned around and spanked me. So that $170 loss I didn't need to take had I covered the trade. Let's see, could I cover it above that swing high? No, not at 1%. Could I cover it above the trend line? Nope, not at 1%. So if I'm going to take this trade, maybe I can risk 1.5% of my account. So I entered down here, cover above there. Okay, I can do that. 1.5% of my account. Okay, it's not going to break me if I lose 1.5% of my account. The market brings me in, gives me considerable heat, and look at that. I would have at least had an opportunity to ride out the trade and perhaps get a little bit more aggressive with my stops now. I'm not saying this trade's going to turn into a winner. It may still turn out to be a stink bomb, but now that I know that the sellers have shown up, I can start taking a more aggressive stop strategy and start rolling my stops in a little bit. Not quite to break even yet. I still might end up getting spanked here, for the tune of $100 or maybe $150. But the point is, by leaving myself a decent stop, I actually have an opportunity to ride out the swing and perhaps even realize a profit on this trade. Yeah, like Jim, fantastic. Jim just bagged 30 ticks in the NQ. He says, see you later. Yeah, and like Joe says, if the market does not play nice, just pack up your toys and go home. That's exactly it. There will be days. Yesterday was a good example. Yesterday was a very nice trading day. Today, just looking at your chart, you can see there's a lot more chop and such involved. But very important concepts to get a handle on. Don't be chasing every single signal. Go for high probability targets. If you don't know what a high probability target is, a closer target is a better objective than a target that's further away. All right? And that should make sense. I forget the exact math, but my 98.5% example, one tick, you'll reach 98.5% of the time. 2 ticks already dropped dramatically. I think it's down to 88. 3 ticks is still around 80. 4 ticks, you start to get into the 70s. 5 ticks, you're already in the 60s, and you're only looking for 5 ticks, and this would be on the E-mini, right? Not on the NQ. And then if you're looking for 6 ticks on the E-mini, I think it's a 50-50 crapshoot. If you're going to get 6 ticks. And that's only 6 ticks. Okay, now I'm just going back through here. There were a few more questions. Okay, so Hans is asking, what is trend trading, swing trading, and scalping? Normally, they're defined by their targets. The DTS tools here have actually been programmed to pick up on market conditions unique to scalping markets, swing trading markets, and trending markets. So it's not the same tool on different time frames, although that's a rough way to approximate scalp trading, swing trading, and trend trading. Some people will look at a 5-minute chart for scalp trades, a 15 or 30-minute chart for swing trades, and an hourly or daily chart for trend trades. Okay, so that's a rough approximation. Typically, scalpers will look for $50 per contract. That's a typical scalping target. Swing traders typically look at $100 targets. And trend traders typically look at $200 targets. Now, in some markets like crude oil, where they're much more volatile, or gold, for that matter, even the Russell, I will double the objectives. Just because a market like crude oil, crude oil will do 5 ticks in a heartbeat. And that's not bad. See, here's a first micro macro cross in crude. It's $10 a tick, so I'll dial my target down to only 5 ticks. You're going to see I get 5 ticks all day long here in crude. Boom, there's one. And see, if I'm trading size, remember, size is what's important. So here I'm risking 2% of my account, $400. And that's, to me, right? If $400 sounds like a lot to you, well then that's because you might be trading a different account size than me, right? If you're trading a $10,000 account and you're risking 2%, then this is going to say $200. Okay, $200 on a $10,000 account, it's not going to ruin you. Oh, and that was the last point I was going to make. Oh, I think I did make it, where you need to have a pain threshold, where you just say, I'm going to stop trading. A lot of times, 5% of my account is my pain threshold. If I blow 5% in a single session, that's it, I'm pulling the pin. I wasn't sure if I mentioned that, but it's important. So here's a trade to the downside, boom, $150. Here's a first micro macro cross signal to the upside. And these are just $50 targets in crude, right? Normally I go for a little bit more. Again, I'm controlling my risk, $400. High probability signal, 5 ticks in crude. Crude bats its eye and gives you 5 ticks. Right, another $150. So there's $300 already. Here's a first micro macro cross to the downside. Did we get that one? Boom, 5 ticks, another $150. So there, within 3 trades over the span, well, that one came in the wee hours of the morning. But over 3 high probability signals just in one market, right? That's the key. I wonder even this one, this signal is not a signal that we have a name for, but I'm curious if it even reached the high probability target. Yeah, there too. Even a weak signal like this gave me at least 5 ticks on crude. Let's see about this one here. I'm just wondering if I blindly traded every single signal in crude, would I at least get 5 ticks? Oh, that one kissed 5 ticks. I don't know if it actually gave it to me, but it kissed 5 ticks before it reversed. But here too, you don't, no point in strangling the trade. Right? I know there's a very real possibility it's going to try to trade back up here to the macro line, so I'm going to try to give it a little bit more room. Oh, look at that. I would have actually been able to ride it out just by giving the trade a little bit of elbow room to get where it wants to go. People always asking me about risk-reward ratios, and please don't ask me today because I don't have the time. Those of you who have heard my bit before know I can get quite passionate about risk-reward ratios and how they don't work. They do not help you become a better trader. Okay, I don't think I missed anybody's question, but if I did, please repost it. Yeah, like Joe says, crude has HD, AD, or ADHD. Yes, very much so. So Hans is asking, so scalp trading, swing trading, and trend trading is not so much about the technique as it is about the target? Well, it's actually a blend of both. Like I said, the Hawk scalper, the programming behind here that generates the signals has been tweaked to identify scalping opportunities. And likewise, the programming for the Falcon has been refined to pick up swing trading opportunities. Oh, look at this. We're back down to primary support. We're starting to generate double dots. That may result in a little bit of a move higher. We'll see. And likewise, the trend trader has been designed to pick up trending signals. I wonder if we hit our profit target just yet off of that green bar sell. Nope, not yet. But the target is also part of the equation. If you're a scalper and you're trying to scalp for $200, well, most people would not consider you to be a scalper. Oh, just for giggles and grins, the crude inventory report is about to come out, and we don't really have a well-defined channel. Sometimes when we have a well-defined channel, what I'll do is I'll actually bracket the range with the OCO order. And maybe we'll take it below the, and this is just totally on sim. I'm just playing with this now while I explain something else. But if crude oil makes a nice range before the report comes out, so let's say this is our range, and let's say crude was trading right in the middle, great opportunity to bracket the high and low of the range and let the market take you out. The problem is where it is right now is that, oh, there we go, nice little move to the downside. The problem was where it is right now that we don't have the flexibility given where the market was here. Now I want to point out too that we were getting a late filter entry signal here. So if I was unaware of the inventory report, I probably would have taken that late filter entry signal. All right, so why is that reporting a loss? How badly did they slip me? That's the other thing with crude. If you're going to do this bracket strategy with crude, you might want to use a stop limit order, because it looks like there was no way that this should have been reported as a loss, because let me see if I can get it to display my entry. Oh, wow. Oh, wow. That's crazy slippage. Yeah. So note to self, if you're going to do the bracket type scenario before the crude inventory report, use a stop limit order. Now the stop limit order limits your risk exposure. See, mine by default is set at 1 tick. For crude, you're probably going to need to dial it up to maybe 3 or perhaps even 4 ticks. Although 3, you know what, 30 bucks is enough if they can't fill me on $30. So the trade would have looked like, well, I'm not going to put it on because the order is live the moment it goes on. But it would have looked like this. My initial entry would have been right here. My stop limit would have been right here. Look at where they filled me. This was that's how much slippage was in here. That's like a 20-point slip. That's not even funny. So using a stop limit order would have actually, I would have not have been filled on this order. So a little, like I say, note to self. Another, for those of you who like to trade crude oil, a friend of mine, what he likes to do is he'll let the report hit the floor like it's done right now, and now he will bracket. So he'll look at the trade or he'll look at the market and he will say, and his strategy didn't work so well last week. Mine worked better last week. But he'll look at the market now and he'll say, well, I know here's the bottom end of the range, so I'm going to sell below there. And now he's going to look for the top end of the trading range. I suppose we can set one up here for now. And this way, if the market falls below here, falls below here, he'll take it low. And if it makes a swing point here, if it trades a little bit lower, makes a swing here, he'll take it up. Late filter entry signal to the upside, so I would anticipate crude perhaps to move a little bit higher. Okay, well, we're a couple of questions here from people. Okay, so we'll see now how my friend's strategy works. So we have an obvious swing. Okay, so Hans is asking, Eric, but with the Hawk scalper, you could make a couple $100 in the crude oil trades. The trades you just mentioned while you were targeting only $50 because it was scalping? Yes. Yes, Hans, because I was going for the tighter profit target. You see, the tighter your profit target, the higher the probability will be that you will have a winning trade. The tighter your profit target, the looser your stop, the more probable your trade will be. So for instance, let's go here to the Hawk because I need the tighter parameters. Okay, let's say we're just take any old signal. What do you think the odds are that this signal will work out? Well, the trade parameters are fairly tight. Right? Now, notice my risk amount is just under $500, $475. Look at the quantity. I'm trading 19 contracts. Trade Manager says that at 2% of my account, I can actually afford 19 contracts. And if this trade works out, I'm going to earn nearly $1,000 on a single trade. But what is the probability of this trade working out? Well, the probability is probably low to moderate because I'm running a very tight stop. Okay, now let's take a look at this. What is the probability that this trade will work out? Okay, my risk is still in the same neighborhood. I'm kind of on the cusp here. Well, the probability is a little bit better, isn't it? Because now I'm giving the market a little bit of room and my profit target is still relatively tight. What is the probability of this trade working out? Well, the probability of this trade working out is probably very high. How can I say that? Well, look at how much room I've given the market to move before it actually hits my profit objective. And you know what? I can give it even more. What is the probability of this trade working out? It's probably huge. It's probably a huge probability that I've given the market all kinds of room to move. It can back up, it can back up all it wants, and I still gave it plenty of time to finally reach my profit objective. So you see, it's a little bit of a blend where you have to give your trade a chance to work, give yourself a reasonable profit objective. Minimum, it should be $50 per contract. Almost every market will give you $50. Give yourself a reasonable stop, but never ever risk more than you can afford to lose. Those are kind of the three components to successful trading. An accurate signal, a good stop placement, and good money management. If you can nail those three things, you will be a successful trader. All right, so write those down. You need a good entry, you need good stop placement, and you need good money management. So here we are with our crude oil trade, in case you were wondering what's going on. We filled the bottom end. Look, we're up $100. Close the trade. Right? There's no point in getting greedy. If you can do that a few times a day, then that's all you need to do. Good entry, good stop management, good money management. Concentrate on those three things. But that was a very good question, Hans. And in a market like crude oil, quite honestly, I double the profit objectives just because it's crude. Crude tends to give it up. And I'm curious, have we reached the high probability target here yet? Yep, just reached the high probability target near the lows. Now let's see if I had taken the original trade. Where did I enter from? I entered right here. No, wouldn't have hit my profit target just yet, but the market at least gave me opportunity that worst case scenario, I could have at least got the trade hopefully to break even. But you see what I did wrong was my stop was too tight. The market wasn't done retracing yet. I took myself out too early. Remember this, folks, your stop loss, I get people saying all the time, well, I can't afford such a big stop loss. Well, yes, you can if you control your risk, right? If you control your risk to 1 or 2% of your account, ideally less than 5% relative to your trading capital. I realize it's going to be a sliding scale. Those of you trading smaller accounts are going to have to risk a little bit more. Those of you risking larger accounts are going to have the luxury of risking a little bit less. But your stop loss is your parachute, right? It is only there to take you out of a trade that isn't behaving the way it should. If I took this trade, okay, I sold here. If I risk okay, this is on the Eagle, my pricing, my brick size is a little bit bigger. If I risk the trade way up here, above, this double swing high, does this really cost me $415? At this stage, is this really costing me $415? Right? The market brings me in. The trade is live. Does this cost me $415? No. It will only cost me $415 if it gets hit. That's my parachute. That's my safety net. This is what I use to keep from blowing myself up. I have met people who, or one person, I shouldn't say people, I've heard of people, but I've met one person who blew up a $20,000 account in a single day. How do you do that? You do that because you don't have a safety net. This is my safety net. This is 2% of my account. It's going to prevent me from doing something stupid like blowing myself up. And it keeps me in the trade long enough that I can actually realize a profit. See, what I did wrong this morning, and like I said, this is something you'll never hear another trade monitor utter. What I did wrong this morning is I framed my trade too tight. Right? I was thinking, oh, okay, maybe it's going to swing a little bit tighter here. Let's see, was this even close to the secondary trend line? Oh, it was. All right, so I wasn't without hope. But this one cost me money. This one cost me $170 by running the tighter stop. Okay, yes, it was an amount I could afford. It was only 1% of my account. It's not the end of the world. But had I run a better stop, right? Had I run a stop that actually gave this trade a chance, maybe above this swing high, I would have realized a profit instead of a loss. And sometimes the difference is as simple as that. Sometimes the difference between a winning trade and a losing trade is as simple as running a reasonable stop or waiting for the better quality signal. You know, here too, folks, two identical signals, right? One right here, one right here. Now, without the benefit of hindsight, which is the better signal? Well, probably this one right here. Why do I say that? Well, it's bouncing off the trend line, right? I know there's trend traders honoring the trend line. They honored it over here. They kind of honored it over here. So we're bouncing off the trend line. We're breaking what looks like a little bit of a bear flag here. So there's a few more things in sync with this signal than the one that I took a little bit earlier. And like I always say this in the room also, don't beat yourself up if you take a bad trade. Look, I've been doing this a lot longer than most of you, and I still get snookered from time to time. It happens. It's the markets. All right. I'm going to need to close up the room here in a little bit, but I want to make sure that I didn't leave anybody hanging on their questions. Yeah, okay, so here Michelle is asking the obvious question that I know some of you will be thinking. Eric, I have found that if I keep having trades with big risk amounts and small profits, I win, but when I lose, it wipes out all the profits anyhow. I've really struggled with that. And yes, it is an issue of, well, for obvious reasons, right? Because we have high probability signals, we're taking high probability trades, but we're still going to make a bad decision from time to time, and it's still going to leave us in the lurch. That's why I suggest you have the trade quota and you try to finish the day on a positive result. Why you have a pain threshold also. And you really, like, an entry is important. You need to really concentrate or focus on getting those high probability signals. And fortunately, you know, for the DTS system, like I say, it's not 100%, but you do get high quality signals. So here is a trend change signal to the downside, and here's the down, here's the up, here's the down, here comes our trend change signal. I can go in with my controlling my risk with my higher probability target. And you know what you can do also here is you can go with a tighter target. I know a fellow who trades, what does he trade? 3-8 and a runner. I think that's what he does. So and there's no magic bullet here, right? There's no magic pill. What works for one person may not work for another. But I know a fellow who trades, his account allows him to trade 3 contracts, and I believe his targets are 3, 8, and a runner. So what he does when he puts on a trade is at 3 ticks, he takes profit. That, to him, that covers the broker and the exchange. So contract number 1 pays his bills, his expenses. At 8 ticks, he takes profit. That guarantees some money in the bank for him. And I think he brings it to break even now. I'm not 100% sure. And then he leaves the remainder on as a runner, the 3rd contract on as a runner in case the market goes somewhere. Because, you know, sometimes you're going to get these more pronounced moves where you can take advantage of something. See, it would have worked. I think it would have worked fairly well for him here on this trend change signal out of the open or near the open. So there's the signal, there's the 3 ticks, there's the 8 ticks. Now if he was at break even, he would have been able to ride out that swing. And depending what stop strategy he used, let's say he would have been stopped out on this reversal somewhere down here, that would have been a fairly profitable move for him. But like I said, there's no magic bullet here. You have to go with what works for you. There was a time that I always scalped for 3 ticks. I just went in, got 3 ticks, got out, especially in a market like the bonds. That's all I needed was 3 ticks. And yes, occasionally the market would back up on me and occasionally it would stop me out, but I had my trade quota. I tried to get myself back into the black. I had my pain threshold so that if it wasn't my day and I blew $1,000, I stopped trading so I wouldn't decimate my account. Capital preservation is everything to a trader. Pay attention to the price action. Pay attention to how the market is moving. You know, like we're getting our second or possibly third macro pullback signal within this downtrend. Why is that significant? Well, we know we normally only get 2 macro pullbacks within a trend. Does that mean I'm not going to take this one? No, not necessarily, but maybe I'm going to dial down the risk to 1%, right? Maybe I'm going to enter below this swing low. Maybe I'm going to look at it like this. What if it's a bear flag? Well, I want it to violate the trend line before I get into the trade. Maybe I'm going to run my stop above here to give myself a little bit more staying power. Right? Stuff like that. So that if the market does bring me in, and let's say this ends up building into a 4-arrow consolidation, as it did back here, right? This was a 4-arrow consolidation, a lot of sideways action. It finally moved lower. But let's say it's going to build into another 4-arrow consolidation. Do I want to be trapped in a 4-arrow consolidation? No, not at all. See, there they go. They're may well be trying to do that. I like shooting trend lines across the peaks just so that I can see what other traders are seeing. There's no secret or mystery to trend lines. And I also like sometimes you can connect the bottoms and it will make it a little bit more obvious if the market is starting to lose momentum. Okay, so look at this. Now what are we getting here? We're getting a green bar sell. Have we had a test of the extreme yet? Shouldn't we anticipate another move lower somewhere through here? Now, I don't need to sell the green bar sell. This is actually a signal that I can reverse on and I can trade above the high. This isn't a signal just yet. I've just got the warning dot. We'll stay with it for a moment, see whether it actually builds into a green bar sell. See, and look at where we're going to. We're going right up here to these highs. This little swing high right here. Okay, so now the green bar sell has disappeared. We should see a test of the extreme. Right? We should see a little bit of a move lower, and then a possible failure, and maybe a first micro-macro cross if the market is truly interested in going higher. But I'm probably not going to jump on a first micro-macro cross without first seeing the test of the extreme. And if I only have a 2 trade a day quota, I don't need to take, if I see a trade setting up like this and I'm not getting a warm fuzzy feeling, you see I'm getting a warning dot, but my macro line is still red, so this is not my first micro-macro cross signal, not yet. But if I'm only looking for 2 trades a day, and this one isn't giving me a warm, fuzzy feeling, I don't need to take it, right? I can hold out for one that seems to have a higher probability to it. I don't need to chase every single signal. Tom is asking, how did the Raptor do? Okay, well, normally with the Raptor, what I like is the first signal, especially like a trend change signal. Oops, let's shoot a trend line across the highs here, and let's see. All right. So quite honestly, Tom, I would have been, oh, sorry about that. I'm just on the cusp here. I probably would have been interested in this buy signal right here, just as the trend line was changing over, or our trading band, I mean, was changing over. Because at this point, it did look like we had a test of the extreme. It did look like we had our double pullback. I would have expected something to come out of here, out of the double pullback. It did not. It failed and went higher and printed a buy signal. Now, with the Raptor and the Eagle, you can do what we refer to as a second push entry. And what that means is we actually let the signal engage, and then the market will show us the limit. And it normally does it within a couple of bars. The danger to doing this, of course, is that sometimes the market will just take off like that and not give you a second chance to get in. But very often, you will have an opportunity for a second push on the entry, in which case you could have entered above these highs. But honestly, I probably would have taken it here, and this trade would have turned out to bite me. It would have reversed on me, would have stopped me out, and then it came back the other way. Now, oops, sorry about that. So it comes back the other way. I probably would not have taken this trend change signal right here, even though it is a trend change signal, because I would still be looking for a little bit of a test of the extreme before a possible decline. So I probably would have passed on that one. It was still, in my mind, too neutral. Well, besides my filter wasn't in sync. Okay, now we're getting a bunch of warning dots. Now we're getting a test of the extreme. Now we're getting a bounce off of the hard edge. This one looking a lot more enticing. That one actually had some follow through to it. So the best signal on the Raptor this morning was this one right here. The secondary signal, which almost was a soft edge bounce, yeah, it would have been tradable, but probably one that I would have maybe thrown a onesie on. See, we had the retest, and I saw somebody was asking about support and resistance here. How do you trade support and resistance? Well, this is a classic way to trade support and resistance. When the market breaks a support area and comes back to retest it, you expect it to bounce. That's classic support and resistance. We have the support and resistance suite also, and this is an assortment of 21 support and resistance lines. And if the median line shows us kind of the middle point, Below here, we tend to be bearish. Above here, we tend to be bullish. The blue lines above and below are the primary resistance and primary support. So there's primary resistance, here's primary support. If we break the blue lines, we normally anticipate the market to move 2 zones. Let's see, did it move 2 zones yet? No, not yet. So the NQ is poised to move at least to 43.10, maybe even down here to 42.94. Now that it's broken through the primary support. But I know Omar likes to use the support and resistance lines, and he would use this as a confirmation. The bounce off of the primary support, that would give Omar a lot more confidence to take this trade. And I know he likes to use them as profit objectives also, so his profit target is probably sitting somewhere down there. And likewise, if you break through the top of the line, you would wait for a retest and an opportunity to buy. And you can also use them, obviously, to cover your trade above because they are support and resistance areas. Okay, we're getting a trend change, possible trend change signal here to the upside. So let's see if we can take advantage of that. Oh, I still have the other parameters on. All right. Okay, Michelle is asking about crude oil, a first micro macro cross on crude. Well, it is. It's a possible. It's building into a first micro macro cross. Now it's technically a first micro macro cross because the bar color is in sync, the micro and macro lines are in sync, the filter is in sync. But you see how this bar is waffling? If this bar turns yellow, no, I will not take it. And yeah, it could be going higher from here. So yeah, it is a possible first micro macro cross signal. I would say that we have seen a test of the extreme here, right? We did see the market try to recover the lows and fail. We did break this little swing high, so we can normally anticipate 2 pushes in the direction of the breakout. What you could do to be safer on this one is you could enter above the high there. Can you cover below the low? Oh yeah. It should be an easy scalp. So that looks like a fairly reasonable trade. We're also getting on the Falcon a comparable signal. Our trend change signal on the Falcon. This one is actually setting up properly, unlike the Hawk, which had a yellow bar in it. And you can see I've got the stop limit on this one, a 3-tick stop limit. They shouldn't actually slip me 3 ticks. Let's dial that down a little bit. So it would look something like that, I think. So just got the warning dots here on the Falcon. We don't have the trade signal just yet. And on crude oil here, you're going to see on the Hawk that now we are coming back with a first micro macro cross. So you see the yellow bar would have nixed the trade, but now we're coming back with a proper first micro macro cross signal. And this one should have a little bit more potential to it if it can get up above these highs. All right, I think I got everybody's question. If I missed Dustin is asking, CQG data is supposed to offer crude. Yes, they have crude. If you don't have it, talk to your broker. For whatever reason, it does not seem to be in your assortment. Oh, and Dustin, if you sent me an email, sorry, I'm a little bit backed up on the emails. I will get to it today. All right, I think that was everybody's question. All right, you guys, you DTS owners, I'm going to see you in the room again tomorrow. Everybody else, thank you very much for your attendance today. I hope that you were able to take something out of today's session. I spent more time talking than trading. Sorry about that. But yeah, we'll keep an eye on crude here. If it gets above these highs, I think we can definitely anticipate a little bit of a rally. Didn't pay any attention to soybeans today, but they're slipping lower. And the NQ, I think the safe direction for the NQ today is definitely to the downside. I'm not sure how aggressive I want to be as a buyer just yet. All right, you guys, we will talk to you tomorrow. Bye for now.